Welcome to the Daily Insights That Matter. Now, Nomura has recently upgraded its assessment of the Indian market, shifting from a neutral stance to an overweight stance. Now, moving to an overweight stance signifies that Nomura now has a more positive view on the Indian markets. Now, in their Asia portfolio, which excludes Japan, they have recommended an allocation of 18.2 percentage points, representing 100 basis points or a 1% increase compared to India's weight in the benchmark MSCI Asia excluding Japan index. Now, Nomura has also taken overweight positions in China and South Korea while adopting underweight positions in Singapore and Philippines. So why did Nomura upgrade India exactly? Now, the rationale behind Nomura's decision to upgrade India primarily revolves around several key factors. They highlight India's status as a beneficiary of the China Plus One strategy, its robust macroeconomic indicators, substantial earnings growth potential, and the positive domestic capital flows. Nomura also views the recent softness in the Indian market, which can be attributed to elevated oil prices, as an opportunity to increase its exposure. Now, it is worth noting that Nomura has outlined a potential risk associated with global oil prices remaining above $100 per barrel. Now, such a scenario could exert pressure on India's current account and fiscal deficits and negatively impact corporate earnings. Now, the funding situation for Indian startups has become quite challenging, and it's causing some significant repercussions, including layoffs and delays in stock listings. Now, in the third quarter of 2023, investment in Indian startups hit a 5-year low, with funding dropping by a substantial 54% year-on-year, amounting to only $1.5 billion. Now, this is according to a report from Traction, which is a market intelligence platform. Early stage and seed stage funding plummeted by about 74% and 75% respectively compared to the previous year numbers. Now, late stage funding rounds also saw a significant decline, though not as steep, with a 33% drop. Now, interestingly, despite these challenges, a few Indian startups managed to secure significant investments. Companies like Perfuze, Zepto, Ola Electric, Ather Energy, and Zyber 365 raised over $100 million during this tough period each. Notably, Zepto and Zyber 365 even achieved unicorn status, becoming the only 2 unicorns added during the quarter. Looking ahead, the funding winter is likely to continue, making it increasingly difficult for startups to secure investments from overseas. Now, this will put pressure on the existing startups to tighten their budgets and operate more efficiently. However, it's important to know that India still ranks 5th among the highest funded countries in the third quarter of 2023 and maintain its 4th place for the year to date. Now, this reflects the resilience of India's tech startup and their ability to adapt to changing market conditions even in the face of challenging global funding environment. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.